accounts direction and auditors framework, which Mark and I are covering. I'm just going to introduce this. The way we're going to run this is I'm going to do an introduction, and then sort of Mark's going to do most of the presenting, but we're going to do it as a two-header. The Academy accounts direction. ESFA publishes together this year the Academy accounts direction and the model Academy accounts and its guidance for external auditors, and these set out the framework for the financial statements for the year ended 31 August 2023, which boards are due to be approving by 31st December 2023. Obviously, in practice, they're going to be approving them at their November-December board meetings this year. I think this presentation aims to be relevant for anyone involved in the year-end process. It includes trustees and accounting officers and CFOs and their auditors. I think, Mark, start off with, are changes significant, insignificant? How would you summarise them?
In terms of the Academy's accounts direction, obviously it forms the basis of how we're preparing the accounts. Changes are not significant generally. I think the SFAs took the opportunity to clarify a few things. And a lot of the changes that are listed are clarifications or updates where things might have not been treated how they intended, but have just made it clearer, I suppose, in some of those changes.
And of course, sometimes quite often when they call something a clarification, it really means it's a change in practice. Yeah. But whatever they dressed it up as. Yeah. Can you tell us? Yeah. Can you just run through some of the main changes, the main updates, which indicated?
So I think on the slide there we've got the first one. What in particular was a clarification. So it was noted that where you've got an accounting officer, you may have previously listed something as an acting accounting officer, where you may have a head or a chief executive off sick, for example, and then someone's stepping in to sign the accounts at that point. Here, ESFA have clarified that there is no position of acting accounting officer, that the other person will come in as being the accounting officer.
And I suppose the other time that happens, of course, it's not when the accounting officer is sick, but when a trust is being wound up, and transferred into another trust, isn't it? And that's
and I suppose that's significant in the fact that you have to notify SFA every time there is a change in accounting officer. You may not have seen it as a change where it was just acting accounting officer, but
the other thing, it's not just accounting officer, it's key signatories, so it's directors. As you need to have directors lined up. They mustn't all go away.
Yeah.
When close trust until they've signed off.
Yeah. The next point listed there, we've got narrative missing last year. Again, not really a change, but it just clarifies that some of the prior year updates to the 21-22 accounting direction weren't necessarily updated in the trustees report. Examples being organisational structure, where you've got subsidiaries, should make it clear about how conflicts of interest are managed there. So that probably wasn't dealt with that well last year, which is why they felt they've had to clarify that. Also, just generally rolling forward the report and not providing practical updates to what's happened in the Academy Trust that year. So again, not really a change, but just outlining something that they expect to see. And then the final point, again, not really a change. In terms of irregularity, they've just highlighted some of the themes from their reviews, which I think we'll come on to shortly, Charles.
Yeah, I mean, kind of just on where the narrative is missing. I mean, one thing that it's easy to miss is that, and this links into what James is talking about at the end about risk management, is it's not just, you've got to just, there is a requirement to describe why you've chosen a particular internal scrutiny option, isn't it? And just so you've thought through that process.
Yeah, making clear why you're addressing those risks. Exactly.
And a theme about those emissions, I think, is that they tend to sit in the governance section. Now, if you can think back to what the accounts look like, you've got trustees report, you describe a load of things, and then you get to governance. And I think part of it is by the time you get to governance, you're running out of energy. So,
Yeah, it's
correct?
avoiding the use of standard wording, I suppose, where you're trying to
Absolutely,
copy the model
absolutely.
accounts, and it's trying to explain more about what's actually happening in the trust. Yeah.
So yeah, and are we going to come on to the? Do you want to talk about the themes from the ESFA reviews?
Yeah. So I think we've got that on a few slides on.
Okay. Okay. So next slide, please.
Yeah. So as Giles mentioned, there's big risks with school building safety with the RAC at the moment. Ahead of that, the accounts directions outlined how that should go into the trustees report, the narrative reporting. So we've got principal risks and uncertainties section. So always needed to outline principal risks and uncertainties and how the trust's addressing those. The change this year, I suppose, is specifically to school building and safety. Just to say that how those risks in terms of the trust estate managing it and keeping it safe are dealt with, what uncertainties there are. So if a school does have RAC, you would expect to see something included there as to a plan of how they're dealing with it. And then similarly on the value for money statement, in terms of how that is being managed, how the school is still ensuring they have value or getting value for money on that estates management process. Yeah.
And the reason we put these in yellow on these slides is because those are the new sections, aren't they?
Yeah. So in the model accounts, anything that is changed is highlighted yellow. There's not a lot of changes, so they are easily identifiable, but that just makes anything stand out. Given what we said previously, that some of last year's changes were not updated, it might be worth looking at the past 2 years to see what's yellow in both model accounts, make sure they're dealt with. Yeah.
Yep. And there's another, and the next slide, please.
Yeah, so this is the accounting officer's statement that trusts are required to sign. And I think Simon, our keynote speaker, will have something interesting to say on this later as well. You can see the highlighted yellow bits there. So it's almost added in the estate safety and management sections to require someone to sign. So that, as opposed to the risks and uncertainty where we've got sort of things that we can tailor and shape for the trust, this is set in the accounts direction as standard wording. So that's a requirement to be included.
But again, yeah, as you say, Simon will talk about this, and there's standard wording and standard wording, isn't there? But the two previous slides are the previous slides very much about tailorable content, which allows you to explain your approach to managing this issue, which is so high profile, and which I'm sure people who are reading accounts will be taking notice of this year. So as part of your risk management, part of your sort of getting out the message,
Exactly.
you certainly have highlighted, they're certainly highlighted where you can enter, and your auditors will be talking through these areas and highlighting them with you as part of the accounts preparation, I'm sure, whoever they are, even though there is no strict requirement for us to be auditing these sections.
Yeah, exactly.
Okay. Okay, shall we go to the next slide?
Yeah, so these are other changes that we've listed out that I suppose are not quite as significant. There's a clarification again on trustees' use of the direction. So I think it's people that are involved with preparation of the accounts. And it also, I suppose the change this year is that trustees are not expected to have a detailed knowledge of this, and should refer to CEOs where
Ask
possible.
the CFO, it says, doesn't it? If you're not,
Exactly.
ask the CFO. You're not expected to know this chapter and verse, which I think,
Exactly. It's accounting officers, external auditors, people preparing the accounts generally. And then I think there's the next point on concessionary loans, which I think that's clarifying some wording. It is in as an update, but it's clarifying some wording where there were some loans that weren't covered under the previous wording, would you say, Giles?
Yeah, I think it was badly worded before.
Yeah.
It was the answer, because the point is technically, long-term loans you expected under FRS 102, so it's about 2014-15 to discount, but of course we don't do discounting on long loans in academy accounts, and the reasons for that is because there's an exemption because they're a charity, but it wasn't it was a technical update because it wasn't properly described in here.
Yeah.
Basically it's clarifying Salix loans and other loans such as SIF loans or loans inherited on conversion with local authorities. There is no question that you should have to discount those and do those technical awkward calculations which are no benefit to anyone. So that's just cleaning that up. The next one, I think, material income sources, that's just, if you've got a list of income sources and the biggest number is other, you probably need to break down what is in other. That's what it's saying. It's just tailor. Think about the accounts. Don't just take the words out of the model accounts without thinking about them. Do you want to just cover the fourth one?
Yeah, and just again clarification that teaching assistants are support staff in the staff cost note as opposed to direct staff costs. So again, probably something that's been identified as not being treated that way. So clarification from the SFA there.
Okay, thank you. Shall we write Academy model accounts? Yeah, that's thank you, Fran. I think, say the accounts direction comes out, the changes in direction are mirrored and illustrated in the model accounts. The model accounts are still called Coketown, just as I mean, I thought that was sort of inappropriate joke, but apparently the English teachers I'm sure will know this, but Coketown is in fact the town in Dickens' Hard Times, and it provides an appropriate backdrop to Dickens' withering critique of industrial society, and therefore calling the novel Coketown indicates there's nothing more in the town than the ceaseless industrial activity with all the misery that it generates, which I'm sure is nothing like any of the academy schools that we've got in this school today. However, more relevant, there are few changes, as we said, but they're easy to find because they're all highlighted in yellow. So it's an easy, just mechanically, it's an easy document to use this. Yeah, the one thing we haven't mentioned is the local authority pension liability guarantee, which is important. There was when local authority schools started being transferred into academy schools, there was a question about what happened to the local authority pensions in the event of insolvency or that school stopping trading, and there was a Parliament affirmed a guarantee in 2013. This was reaffirmed in 2022. It doesn't necessarily, and the disclosure in the accounts is updated to reflect that, which I think is reassuring. As people with who have stupid staff out of academies into other organisations, the guarantee doesn't necessarily follow, and once they move out of the sector. Right, on to the last document, the framework and guide. Now this is primarily, of course, something that auditors read, but it is, I think, useful to everyone because it gives details on common irregularity themes, which is useful, including to trustees and accounting officers, because it's sort of there. But for the grace of God, go I. These are the things that other people hopefully are falling down on. These are the things that you need to concentrate on to give the auditors an easy time, apart from anything else. So, internal financial reporting. What are they saying about that? What's going wrong here?
Yeah, so the requirement to share the management accounts with the board has not been followed, or of poor quality is something they're seeing. Financial management.
What sort of requirements, Mark?
So obviously management accounts are required to be done monthly under the Academy's handbook and shared with the board. What's the update now, Charles? It's every at least
6 times a year.
6 times a year, every other month roughly. So yeah, that's the requirement. So that's not always being followed.
There are specific requirements, aren't there, for profit and loss and cash?
Yeah, so accruals accounting is required, so it can't
Yep.
just be a budget monitoring report, which and
Was
I
the
think people are,
case in the past sometimes, wasn't it? Yeah. Yep.
yeah, almost inherited from local authority, I suppose, doing the budget monitoring reports. This is something that's getting better, I think, because as academies are getting more mature, but it is still an issue, as ESFA have detailed. Also, just general financial management issues are reported on. So the sort of thing you'd expect to be reported, I suppose, where not confident that there are the correct processes in place for bank reconciliations, control account reconciliations like that, and fail to submit mandated financial returns to ESFA on time. So that's your accounts return, BFRO, land and buildings return, anything that is required. If there's a regular pattern of that not being shown, then it'll show on ESFA's radar there. And then the second point there, again, we mentioned this earlier, related party transactions. So prior approval not always being sought for related party transactions, and the cost policy not being adhered to. Something that I think you'll touch on later with James, Charles, in terms of how things are changing with related party transactions.
Yep.
But again, a big risk in the sector, so is still an issue. So I suppose that's why the rules are stringent, because it's where things can.
And the pecuniary interest, the declarations are of course tricky, aren't they?
Yeah.
It's easy to get them wrong. Easy, you get them in place at a point in time, internal or external, and they go wrong as soon as something changes if it's not updated.
Exactly.
Okay, and then we'll keep going. I mean, there are also occasional incidents. Fran, can we? Yep.
Yeah, so I think we'll quickly cover these. I suppose these are other things that are showing. The yellow ones being new ones this year.
Yeah.
So you've got breach of capital funding terms and conditions. I don't know why I've done that the wrong way around, but failure to ensure competitive tendering processes. So they'll obviously have, for tendering, the school will obviously need to set their tendering process, and the auditors will review whether that's in place. So this has popped up on this list because that's not always happening. And the capital funding, where there is capital funding, there's often terms and conditions. So if that's not been followed in some cases, obviously. The other points are previously listed. So yeah, do you want to go into any detail on that, Giles?
No, I think those are. I mean, I thought, and there's still alcohol. There's still conflicts of interest. Still about making sure that also that chairs of governors, things aren't approved by chairs of governors when they should be going through whole boards of trustees, etc., etc. So I think that's fine. It's just the slightly interesting new emphases on competitive tendering and capital funding. Should we have the next slide? Before we finish up on this, there is a subtle addition. You'll notice that some of those irregularities that we talked about before were about transactions. So a related party transaction is an approval of a transaction. It's transactional. Making a disclosure of a conflict of an interest on a website is not transactional. And ESFA said the way that auditors deal with irregularities they find has changed subtly. So they're saying if you get a material irregularity and material is what auditors judge whether things are important enough or not, a material irregularity of a financial transaction, this will be a modified conclusion to the accounting officers, the reporting accountant's regularity report. Not the main audit report, so it's in the public accounts. However, a regularity that is either not material or is not in respect of a financial transaction, so it's non-transactional, it goes in the management letter. So the auditors may therefore, and the point about that non-financial transaction, not in respect of a financial transaction is new. This is a new distinction. So you may find that if you've got an irregularity discovered this year, the auditor is more likely not to put it in the irregularity report. However, there is still a judgment Matters in the regularity report may be in the findings report, and matters in the findings report may be in the regularity report. So that's not cut and dried. It depends on amplitude and severity, but there is more of an emphasis on the financial transactions going in the regularity report.